Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, September the 30th. I'm Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, and how that comes in to impact the overall markets with my market analysis. And I do the same thing for you folks in these daily market commentaries, but I'm going to go a little bit further, and we're going to talk about implementing option strategies around market assumptions. We dig in the devil of the details, look at the internals of these underlyings. Yes, it may sound like it's a little bit difficult, but what I do is I streamline the process for you all in my guidelines or my roadmap to trading options. So please check out those webinars in that course, because we are making it very clear to the new and savvy trader on how to trade option strategies. We don't just pick an option strategy out of the hat. We follow specific guidelines in order to find the right strategy for your given assumption. All right, so without further ado, let's get on with the economic data. I usually start with across the pond, but it's a pretty light week for overseas data. But here in the United States, we got some pretty good stuff coming out. We have ADP, non-farm payroll employment change, coming in at 750,000, expected to be 650,000, better than expected. Now remember, that number is a precursor to the real important number on Friday, which is the non-farm payroll. Obviously, we haven't gotten that yet. That comes out on Friday. That's the one most people are going to be looking at. This ADP number is usually all over the board, to be quite honest. Chicago PMI coming in better than expected at 62.4, expected to be 52 even. Anything above 50 on these PMI numbers, which is Purchasing Managers Index, it's a forward-looking guidance. If the purchasing manager is feeling strong about the economy or feeling bullish about the economy, that number goes above 50. Now we're up in the 60s for Chicago PMI. Also, we got the final GDP numbers coming in at negative 31, expected to be negative 31.4, expected to be negative 31.7. So slightly better than expected there. And prices came in at negative 1.8, expected to be a negative 2. We want to see those, generally speaking, numbers rise, because people think that that shows demand for goods and services, right? Gross domestic product is GDP. So when you're demanding it, you're driving prices higher. That's generally a good thing. It shows inflation is what that is, really. All right, pending home sales coming in at 8.8%. Remember, I talked about this just yesterday, that we're seeing record low inventory for houses, less than 3 months, I think it is, and prices of houses are moving higher, but we just saw that dip in interest rates yesterday, and that going below 3%. That is a huge incentive for people to borrow money at a time where you can get an interest rate below 3% for 30 years. That's just incredible. All right, also, finally, crude oil inventories, actually not quite finally, but crude oil inventories, negative $2 million or 2 million barrel drawdown, expected to be a positive build of 1 million. So that is supply coming out of the market, assuming that there's the demand rather than a production cut, right? So we saw the inventories come off. That's giving crude oil that bullish move back up near $40 a barrel, and right there at the point of control. Now, I talked about it yesterday. This 50 Fibonacci is going to kind of get muted a little bit because of the point of control lining up quite nicely with it. Not sure why that's freaking out. Is everything else working here? Just taking a moment. My computer running slow today, I guess. So what we're talking about is this 50 Fibonacci there, but it lines up the point of control here. So that is going to be a little bit more muted. A lot of people will talk about that 50 Fibonacci as being a key level. Well, yes and no. Well, at this kind of juncture, I think it's a little bit more no than what we would normally see there. So moving back up towards $40, but still pretty much stuck in a rut there. As you can see, just flatlining for the most part. Gold futures, bit topping out after yesterday's nice move. And this, I believe, is, we're seeing the equities move higher. They're just kind of pulling it out. I still think that a weakening dollar, which we saw yesterday, is going to continue. Why? Because of the stimulus package coming around the corner. We don't have any for sure signs of it being implemented in the near future, but it seems like we are getting closer and closer to that stimulus package, which would weaken the dollar further, cause gold futures to start to move again. And, the bulls want to get it above that 1923 area. At the end of the day, you could be looking at this as a trade. This is not a trade recommendation, but it seems like we have gotten a nice little bottom here, right in and around this area. It pretty much lines up with 1850. So as a long, trying to get above this 9-day simple moving average, one could believe that that would be, if you wanted to create a trade, that this would be, if you're bullish, this would be, why aren't you switching over? This would be your stop. Put in a stop somewhere around that 1950 area if you are wanting to be bullish on this for that stimulus package. I think if we get the stimulus package, we could easily see this move above 1923 there and probably start getting back up into somewhere to test, this area at 2000. So that's what I would be looking for as a trade possibly, but it's not really anything that's jumping off the books at me. Why? Because I already had that bullish trade on for the bounce, and we talked about that yesterday. I was short GLD. Ended up covering those trades, which I'll talk about here in a moment. Bonds coming off by better than 1.5 points after getting back up right into that sweet spot I talked about so much. Really a bit surprised that we broke down below this, especially with all the Fed governors talking yesterday, mostly saying there aren't going to be higher interest rates going forward there. So, the fact that the bonds are coming off as much as they are today is a bit of surprise to me. I thought maybe we'd see a little bit of weakness. Why? Because we're seeing the equities move higher and therefore VIX moving down here, you can see. But the Dow Jones Industrial Average up 350 points, just over a point there, 1.33 points, I should say. But back to the point of control, we don't look to be wanting to go down there and test that 200-day simple moving average that I've been talking so much about. Equities higher today. One thing I wanted to mention, we saw the Dow Jones is outpacing the NASDAQ to the upside. Tech sector is doing rather well, but some of the, what is happening here with the geopolitical stuff, right? We just saw the debate yesterday or last night between Biden and Trump, and who won the debate. Are the equities telling us this? Well, it depends on what news source you actually look at, to be quite honest. I don't watch the news or anything. I did flip through several different news stations, and it was complete opposite thoughts on who won that debate and how that was going to affect the overall markets. Markets are moving higher today. Some people are saying, markets must be shrugging off the fact that Biden won and isn't as concerned about raising taxes and doing all that and what I see as counterproductive to a strong economy coming out of this whole thing. I think keeping taxes lower, I don't know if we necessarily need to lower them much further, but lower taxes allows that velocity of money to be spent. I think the market is considering the fact that these Fed governors yesterday keeping interest rates lower for an extended period of time. We're looking at a stimulus coming around the corner, and the markets are making a move higher based on more of a stimulus thing there. And we are seeing another round of coronavirus. We talked about the Texans have, I think it now ended up being 8 people, 2 players and maybe 3 players and 5 people, staff members contracted it while they pushed off the game that they were supposed to play against the Steelers to either Monday or Tuesday. I don't know that that's actually been decided yet. But, we are seeing some reinvigorated or resurgence is what I'm looking for. Resurgence in the coronavirus there, in and around the United States in certain areas. I think New York is a hot spot right now too. All right, so equities are moving higher. It's hard to discern whether the geopolitical environment is really driving this, or there is just a move that there is a risk on trade coming in here. It's really hard to discern today. I just have so many levers and pulleys going on in the market. It makes it hard to say. All right, so let's talk about the E-mini S&Ps. They are up almost a full % on the day, back above that 50-day simple moving average. Again, I was expecting us to at least come down and test the 200 days for the most part, give it a little bit of squeeze to most people. I don't know that we're necessarily out of that woods yet, but bulls are going to celebrate a fact that we have gotten back above that 50-day simple moving average there. And I even talked about this with a chart setup yesterday. It did look like more of a pause type of trade where you get a couple of bounce days and the weaker hands kind of settle out and it creates a pause. There was not a discern of a topping pattern there. And today's move, at least as of right now, looks like it is a confirmation that we are going to continue to move higher in the equities, at least for the foreseeable future here. All right, so let's talk about a couple of other things with the, this was the market late overnight. That was basically the European overnight trade selling off and then coming into the day session to flush those guys out. Now we're settling down a little bit, but a strong move into the day session with the E-mini S&Ps. And probably more so on that economic data like the PMI, crude oil inventories, things like that. All right, gold. We talked about this yesterday, and I was trying to get out of my trade, which I was able to do. Late in the day, I just kind of left my order in there to get run over. And I had on originally, I sold the October 166 puts on the 24th, so not very many days ago. Obviously, it was right here. So I did get a positive move. I got the directionality right. We did see a little bit of volatility creep back in yesterday, which was kind of hurting me a little bit, right? I talked about that. I got the move, but a lot of times we have a tendency to see gold when it rallies has some spikes in volatility. Well, that's what we were getting yesterday, so it made it a little bit more difficult. It would kind of offset the upside move that I was getting there, but ended up being able to get it late in the day. So I sold those 166 puts in there for 79 cents, bought them back for 26 cents. A little bit of a down move here today. I don't know if it's any worse necessarily than where I got it, because you can see that volatility came back out. Market coming off, volatility came out. It probably helped that trade a little bit today, but I haven't gone back to look at the pricing on that. And then let's talk about Google. I decided to throw in a trade here. We've got a nice little bottom here with the Google, where on this 200-day simple moving average, you can see it's acted as support quite nicely. Yes, it is in and around that point of control, so we could bounce back and forth. But again, I decided to go in here. We've got high volatility. Volatility is coming out. There's only a few days, 17 days left in the October contract, 16 days left in the October contract. So what we're going to be seeing here is theta. We can see the thief in the night, which is theta. Theta. All right, so theta is the thief in the night that comes and steals our premiums, right? So what we're going to be looking at here with that type of trade is the theta really starting to pick up, and I'm trying to find exactly where, what the theta component is of Google right now, but it's pretty extreme. Anyway, with Google, I went into the October, sold the 1,400 puts in there for $12.20. So again, looking at that level, 1,400 acting as a nice support. I also got $12 as a credit, so that brings my break even down to 188-ish. So a nice strike location. It's acted as support before. Heading into the earnings, I think people are going to be kind of gobbling that up a little bit as they have been knocking it out of the park for earnings. So I think that that level will absolutely be supported, and I'll be able to cash out for at least 50% of my max profit. In this trade, I'm not necessarily expecting volatility to come out dramatically. It's really taking advantage of that theta component that I'm going to be getting every single day. So in this trade, it's going to be probably at least a close to $1 for a trade like that, and it is theta is 87 cents a day. So that is quite nice. If I do get the volatility coming out 1 percentage point, it came out. We could look at this as the percentage points it's come out from yesterday to today is from 2 percentage points, so that's $2. Because the theta component is 91 cents, so close to it. I mean, for government's sake. So got it. A lot of things moving in my favor there. I'm not really playing this for a volatility crush. I'm really doing it for that theta component as it gets more and more aggressive every day that goes by. So playing it to the upside, think it's going to have a bullish move here. Playing that theta component, high volatility, as I would be looking at this volatility being relatively high. If we try and draw some lines there, I actually wanted to make that a straight line. So throwing a line in there, maybe throwing that line in there as a low. Right about 50% of 50 IV percent. So right nailed in between basically the high and low there for the most part. All right, then right before I went on here, I did get out of, I wasn't expecting to have to talk about this, but I had on a trade and was able to get out of my TLT trade. And you guys remember, I played this to the upside, expecting to get back up into that value area that we talked about for the bonds, which is right here at the point of control where we're at here. But I was expecting us to move a little bit higher, test basically right around what would be equivalent to the 171 here in TLT. So I had gone in there and bought the November 170 calls in there for $2.55. Pulled the ripcord on it. 127 is where I sold out of those for a loss with that move down today. I don't want to start getting into dealing with theta and everything else. It's just traded too sideways. Pulling the ripcord on it. There's just no money to make made on long calls when we're just trending sideways and just kind of backing back and forth. I thought we would make a little bit more of a move to the upside and maybe test some of those value areas, cover this gap right in between there. So I thought a lot of things were going to be working in my favor. That didn't happen, and basically a time stop is really what I'm getting out of. Also, I do talk about in the daily market commentaries and stuff like that of just kind of, it's not working out. It's winding up like a rubber band waiting to snap, but it didn't do that for me. So I'm just pulling the ripcord on it and moving on with my life. Allocate that money somewhere else. So that's all I got for you guys. Hope you guys enjoyed this. Also, check out our Facebook page and our YouTube page where you can get all kinds of content there. Also, give me a thumbs up on the video. A comment. I'll answer you guys in the comments if you have any questions or anything else like that. Best thing we can do is share this with your friends, because why? If you find value in this, I'm sure some of your friends will find value in it, all right? So, all right, that's all I got for you. If you can't take that, take it easy.